Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 15th, and we got a lot of economic news releases scheduled for today, so we're going to jump right on into it because I know you guys got a busy day ahead. And we're going to start with the weekly jobless claims. We had 385,000 reported last week, people applying for unemployment. We thought that number might go up a bit, 390, and actually dropped down to 366. So those are all very good numbers that we're seeing right here, well below the 400 threshold we've been kind of seeing. So again, this is pretty good. These are all good numbers here. Another one, the core PPI. We're going to avoid the headline today because there's a lot. The core is where you wipe out the food and energy, and this is really kind of more what people look at. And we had back in October, it was a zero reading. We thought it might improve or up a little bit at 0.2, and it only improved to about 0.1. So these aren't huge. This is basically the wholesale inflation because many times their costs may go up, but they may not pass along the consumer. And tomorrow we're going to actually see the core CPI, which is the consumer price index. So that will be important to note tomorrow. And then we got the Empire State Index, and what that is, it's manufacturing in the New York region. So this is for December's numbers. Back in November, we had a reporting of 0.6%, so it's like almost nothing. We thought it would improve a little bit, and actually jumped up to 9.5, so that looks very good for us. And then we got the Philadelphia Fed, which is also manufacturing in the Philadelphia region. So we had reporting back in November about 3.6. We figured it would be improve a little bit, and it went up to 10.3. So all very good numbers. Manufacturing on the East Coast, at least the Northeast area, showed some improvement for December. We had capacity utilization for November. So October was 78. We figured it would drop a little bit, and it did. It came in at estimations of 77.8%. So not bad numbers there. These aren't like huge like market movers, but the Philly Fed, the Empire State Index Fed, and the jobs will be really what will be driving numbers today. The markets. And then the other item here to note would be the industrial production for November. October we showed 0.7%. We had zero showing for estimate. Figure that maybe it might drop a little bit, and we had a slight contraction when it came to industrial production back in November. So it things kind of pulled back a little bit. So let's go ahead and take a look here at the headline news. Stock market has a rally, but it has a bit of a rally. It's up because it's great economic news releases, but it is kind of being held up primarily because IMF had warned of worsening Euro's debt crisis, so it's kind of preventing us from having a nice big rally in the stock market today. And then also some good news, long-awaited U.S. military coming back from Iraq. They're finally coming back home after 9 years, so this is great news for everybody. Welcome back to our military vets. Thank you for your service. We certainly appreciate you folks. So let's go ahead and see what the bond market is doing and where interest rates are going. As you can see, we have had a couple of rallies here. Like yesterday, we were kind of hitting the ceiling here, as we could point here. That's why we have this long wick on this candlestick. And today we started down a little bit, about 9 basis points lower, or about 6 to 9 basis points lower than where we left off yesterday. And we did have a little bit of rally, even up 12 basis points. We've kind of pulled back a little bit. We could be trading in this range today, because the market's going to be deciding if the news in the U.S. is going to be relevant to keep rallying, or should we look at the European news? So it's going to be indecision right now here in the morning. If we keep pounding on this, the ceiling, it could go either one way or the other, meaning that it could weaken and we can have a rally break above it, or it could strengthen and somehow we go in the opposite direction. My personal feeling would be is that it could weaken and we could have a nice little rally, go up above, primarily because it seems like we're watching more Europe or what's going on. It doesn't seem like we're going to have any resolve there anytime soon, even though some numbers here in the U.S. are looking better. But January, February, we could see some different numbers here in the U.S. too. So that could quickly change as we do have seasonal jobs during the holidays that could come back, change things back in January and stuff. So, but there are obviously other jobs out there. As we see, we've past reportings of 3.4 million jobs opening, so that's good to note as well. So, all right, folks, interest rates are about the same as where we left off yesterday. Not much change in that market. You guys have a wonderful day. I will catch you tomorrow. If you guys are on my page, go ahead, please subscribe, get your free updates. Have a great day.